without further ado, I'd like to give a very, very warm welcome to our wonderful host for this evening, the wonderful Rosie Bannister, who is going to be talking about all things finance.
Cool. Thank you very much, Rowan. Great. So yeah, all things finance is the topic for tonight. So hi everyone, for those of you who don't know me, I'm Rosie. I am a stage manager and member of the SM Nest, but before I trained in stage management, I was a personal finance journalist for the last 5-ish years. So that's kind of what makes me vaguely qualified to talk about money. It's one of my favourite topics other than theatre. So yeah, great. We'll kick off. What we're going to do then is we'll start off with some kind of general money saving tips and tricks, things you can do you might not be aware of. And then we've got lots of talk about self-employment, self-assessment, doing your tax, invoicing and stuff like that. Cool. Great. So kicking us off then. So yeah, just some general tips for managing and saving your money. Number one, really good tip just for everyone really, which a lot of people don't do. It's a really great idea if you can to track your spending. You know, if you don't know how much you spend, then you can't even start thinking about budgeting or anything. So yeah, that's kind of one of the best things you can do to just be aware of money and yeah, what you're spending. There are some apps out there that you can use to kind of help you with this. I use one, it's just called Spending, and it's really good. You can just manually kind of put in yeah, what you spend and any money you've got coming in, and you can categorize it, and then it will kind of show you at the end of each month like how much you've spent and how much you've got coming in. And it's just a really great way of making sure you're on track and you're not going to go into debt or anything like that. There are also a few new banks at the moment, recent ones that have launched, like Monzo, some of you I know probably have. Starling is another great one, and they've got loads of inbuilt budgeting features, so you can use them to really like stay on top of your spending within your own bank account, and you can kind of they're just like normal banks. You can set them up like normal. They've got all the protections that all of the kind of old school banks do. They're really great. So yeah, on the theme of tracking your spending then, budgeting is key. A lot of people don't make a budget, but it's a really great idea to do one if you can, even just to sit down at the beginning of the year and kind of note what you're aiming to spend each month on everything really. So everything, living costs like rent or mortgage if you have one, bills, and just all the things you're going to spend. It's really great to if you can include kind of big one-off purchases that you're going to do throughout the year, so like for Christmas or holidays, things like that, because then you can get a real kind of overview of your whole finances. There's a really good budgeting tool that the Money Advice Service has. I think we're going to send out a PDF at the end of this with a load of handy links on there, so that's one of the ones on there. And then once you've tracked your spending and you've made a budget, that's when you can really start kind of cutting back and making savings. And there are some tips as well to help you do that. So things like don't go shopping without a list. Sounds kind of obvious, but it's honestly amazing like how much just rubbish you'll buy if you don't go into the supermarket with a list. I have done it myself. Also, another top tip for spending is if you're going to buy something and it's kind of an impulse buy, if you're buying online, put it in your basket and then just literally wait 24 hours and just see if you still want that thing. If you don't, probably means, you know, it was just an impulse purchase and you don't really need it at all, so you can get rid. Also, some retailers will kind of send you a discount. So if you put something in your basket, don't buy it and just kind of leave it a day, they'll send you a discount, which leads nicely on to that as a general top tip for spending. Always get a discount if you can. So I know a lot of you guys are still students. There are loads of student discounts out there. You can use Uni Days as a site, and it has an app as well, which has loads of different student discounts. Also Student Beans is a good one. So yeah, just always check really for a discount, because it's literally free money essentially. And also just lots of websites. There are dedicated websites for discounts, so things like Voucher Cloud and voucher codes. They're really good ones. Generally, if you Google something, Google a shop name and a discount, it's likely one of these sites will have a discount for it. Another great way to get kind of discounts or to save money is to change providers for things like any household bills, so broadband, energy, your mobile phone. It's honestly amazing like how much money you can save. It's really quick, especially things like energy. People are scared that you might somehow lose your energy connection or it's going to be a big hassle. It's really not. I a couple of years ago switched my parents' energy bills and saved them £500 a year. So it's really can be great savings. and takes like 5-10 minutes. There are sites online you can use to do a kind of comparison of the whole market and see how much you could save. So that's a really good idea. Also, again, for those of you who are still students, council tax, you can get, if you live in a household with all students, you don't pay any council tax. So make sure you've got that discount applied. You can go to the government website and apply to your local council for that. If you are a student and you live with non-students, you can still get a discount for the household. I think it's 25%. So just make sure you're not paying that council tax amount. That's a top tip as well. There are also cashback sites you can use, lots of dedicated ones to get cashback on kind of lots of shops. Top Cashback and Quidco are two good ones. There's also a new app called Upside, which you link your credit and debit cards to, and yeah, can get cashback that way. It's pretty good. Lovely. Third general money saving tip then is build your credit rating. So this is something that a lot of people don't really know anything about, or there's lots of misconceptions about kind of credit scores and things. Essentially, if you have a good credit rating or good credit history, it means you're more likely to be accepted for other credit products in the future, like a mortgage is the biggest one that most of us will get. There are a few things you can do if you haven't had any credit products at all in the past. There are a few things you can do to kind of, yeah, boost your credit rating. A big one being is just make sure you're on the electoral roll. So that means you're registered to vote, and it's just a way that lenders can see that you're kind of trustworthy and are a real person, and it just makes it's easier for them to find you, so they're more likely to give you credit in the future. It's also a great idea to have a current account that you kind of use regularly, so a bank account. Try not to live in your overdraft if you can, although student accounts often have got a 0% overdraft, so that is a better deal than most, but yeah, try and not live in your overdraft if possible. And then final one on credit ratings is if you're going to be sensible and you know that you can kind of trust yourself to manage it well, getting a credit card is a really good way of building up your credit. Only do this if you're going to pay it off in full every month, or if you've got a 0% deal, which is a slight kind of special case. But yeah, so they're a really great way to build your credit, but yeah, only do it if you're going to pay it off in full every month. If you don't think you're going to do that, or you're going to be tempted to spend money, it's not free money, you do have to pay it back. So yeah, don't get it if you're not going to do that.
Rosie,
hello.
I'll jump in on that one actually.
Yeah.
The credit card thing is a really valuable thing to get, and I would advise if you do reach out to get a credit card, get one with a really small limit, like maximum like £200 or something like that. And there are a lot of credit card companies that will give you a credit card for that amount. If you even if you just spend the £10 that's in your account on your credit card, and then go straight to your credit card and pay that £10 off from the £10 that's in your bank, and you do that every month, that will build your credit score up ridiculous amounts, and be better for you in the future. Yeah, absolutely. Yeah, exactly. And also if you do apply for a credit card and get given a larger limit, I think you can contact the credit card company and say, look, I only want a £200 limit, and they should reduce that for you as well. Yeah, if you think you're going to be tempted to spend too much money. Great. Cool. So next point is make your money work for you. So this is really about kind of savings accounts and investing. Yeah, don't just let any savings you have just sit in your current account, because it likely will not be earning any interest, or like terrible rate of interest. So yeah, it's really just about making sure that your money is kind of earning as much interest as it can be. Interest rates are not great at the moment. They are a lot worse than they used to be, but you can still, earn some interest. So if you can, you might as well. There are lots of different kinds of savings accounts, but the top easy access one at the moment is with Atom Bank, which is an app-based bank. Again, it's like any other bank, it's got the same protections that all the other kind of big ones do. And yeah, that's paying 0.5% AER interest, which stands for annual equivalent rate. It just means the amount of interest that you'll get per year. So yeah, per year you'll get 0.5% interest on that. That's the top one. Yeah, as I said, there are lots of different kinds of savings accounts, so it's worth, if you're interested, doing a bit of research on the ones that are out there. The other thing when it comes to kind of getting returns on your money is investing. Now, this is kind of a really good, it can be a really good option. You really need to do your research on it though. So investing generally, on average, has kind of better returns than savings accounts do. But there is a risk that you may lose all your money with investments. So yeah, don't go into any investments without doing your research. There's lots of dodgy things out there, so always use kind of legitimate sites and things, and just be really, really careful. But yeah, it's an option to look into if you potentially want better returns on your cash. Great. So yeah, next point, just really quickly about student loans, because I know a lot of you will probably have student loans. Don't panic about them. It's really easy to see the balance kind of going up and up, and just kind of want to clear it as soon as you can, or think that it's kind of, you know, debt, and it can be damaging in some way. It's kind of not, well, it is a loan, but it's not massively helpful to think of it as a loan, because it's not like other loans. It doesn't affect your credit rating or anything like that. Yeah, so the way student loans work, so you guys probably are all going to be on, well, a lot of you will be on the Plan 2 student loans. If you live in Scotland or Northern Ireland, you'll probably be on Plan 1. What happens is, so you get your student loan while you're studying, and then once you graduate, you start paying it back. If you don't pay back your whole student loan, it will be wiped. So after 30 years, so 30 years from when you become eligible to start paying it off, if you haven't cleared it, it will be wiped. So you won't owe anything anymore. So that's why it's really not like a kind of traditional loan debt in the same way. And the way it works, so with Plan 2, which is what a lot of you will be on, you only pay back 9% over a certain threshold of what you earn. So if you earn, so currently for this tax year, it's £26,575, so about £26,500. If you earn less than that, you don't have to pay back any of your student loan at all. If you earn more than that, you just pay back 9% of the portion above that. So for example, if you earn £27,000, you pay back annually, you pay back 9% of that difference, so about almost £500. So yeah, it's really kind of small amounts. So unless you're going to be earning really high amounts, you know, consistently throughout your career, it's very unlikely you're going to pay back the whole student loan. So it's really, yeah, not something you should be too concerned about. I think around 80% of people won't pay back their student loan at all in full, yeah, before it's wiped out. So yeah, it's just something to be aware of and know that you have it, but you don't need to be too concerned about it. Great. Finally, now, I mean, pensions is a massive topic, and we're just going to touch it very, very briefly. But someone asked about them, so I thought we'd include it. So yeah, so pensions are kind of a product for your retirement. You can access them generally only once you turn 55. And generally your money is invested in pensions. So it is a form of investing. You just kind of can't get the money before you retire. Yeah, pensions, again, yeah, it is a really complicated subject, so I'm just going to touch really briefly on them. But any money you put into your pension, you don't pay tax on it when you put it in. It's taxed when you come to take it out at age 55. Generally, there are certain limits, annual limits and lifetime limits with your pension, but it's unlikely that you'll hit them unless you're like a super, super high earner. And then someone asked about the equity pension scheme as well. So just to let you guys know, yeah, so there is an equity pension scheme. You don't have to be an equity member to sign up to it. It basically just has lots of different theatres and companies are signed up to it. And what it means is, so they all have their own slightly different agreements within it, but basically they will all contribute some money if you join up to it, and you contribute some of your wage. So basically, it's free money, essentially. You can't get your hands on it until you retire. So if you are going to need that money now, you know, it's not going to help you. But for a lot of people, it's a really good idea to sign up to. Yeah, pensions with, it's called auto enrollment. That's a thing that you have with employer pensions. But yeah, the equity one is good. So for example, yeah, lots of companies are signed up to it. So like Salt, Disney, National Theatre, RSC, Subrep and Commercial UK Theatre, and ITC, and there are others as well. Some TV ones as well are signed up. And the ITC one, for example, so if you contribute 3% of your wages, they will contribute 5% of it. So essentially, you're just getting, yeah, 5% of your salary into a pension for free, but you have to put some money in as well. There are also types of pensions called SIPs, which are self-invested personal pensions. These just mean they're for you if you're self-employed and you don't have an employer, or you know, if you were working for a company that wasn't signed up to the equity pension scheme, for example,
basically you won't get any money from your employer, but you can still put money in and get the tax benefits of it. Yeah, pensions are kind of, you know, vital. If you can afford to save into one, you absolutely should, from kind of as early as you can, because it just means that your money will have a lot longer to grow. And particularly the equity pension scheme or any other employer pension schemes you have, you know, if you're getting money from your employer, that is literally free money for essentially doing not very much. So yeah, it's a really good idea to sign up to one if you can.
And I'll jump in on the back of that as well, Rosie.
Please do, yeah.
So when it comes to pensions as well, it's really important to remember that a lot of places, if they don't do the equity pension scheme, they will auto enroll you onto a pension. Because they have an obligation from the government, but it's a legal requirement now that employers have to pay into a pension for you. So many contracts that you go onto, if they don't support the equity pension scheme, they won't allow you to do it. They will pay you will be paying money out of your wages each week into a pension, and they will also contribute on your behalf. You can contact if you're registered with a certain pension provider. You can contact your pension provider, give them the details of that pension, and they will bring all that money you paid in from the other pension into their pension for you, so you can keep it all in one place and you can keep building that central pot. So it's a really I'm in the process now of trying to consolidate all my pensions from all the many jobs that I've had into one place. It is a really handy thing to do, to keep hold of that information somewhere, very important, and don't lose it, as to who you have actually got pensions registered with, because trust me, if you leave it over a lot of years, then you've got a lot of work to do to pull it all into one place. But it is worth it in the end to have a nest egg for yourself when you retire.
Yeah, great. Thanks, Martin. Yeah, absolutely. You can also choose to, if you want to, there's nothing stopping you kind of moving existing pensions to another pension provider. If you want to, you can move it around however much you want. Yeah, it's just something you can do. Auto enrollment, I think, is only if you're age 22 or over, and I think you have to be earning at least a certain amount. But yeah, often you will be auto enrolled into pensions. Great. So yeah, so now we're going to move on to self-employment and tax. Again, big topics, but probably apply to all of you here, I'm assuming. So just the things we're going to cover: how you become self-employed for those of you who aren't already, paying tax, kind of how you do it, what you need to do, things to be aware of, some top tips, largely from Martin, about just kind of practical things you need to know when it comes to your taxes. We'll cover really quickly just income tax and how that works, and national insurance, which is just another kind of tax you have to pay. And finally, we'll do a little bit on invoicing and things to be aware of with that. Cool. Great. So yeah, becoming self-employed. So I guess a lot of you, especially if you're still students, are probably not self-employed yet, not registered. So you have to set up as self-employed if you're going to earn at least earn £1,000 or over from self-employment in any tax year. So the tax year runs from the 6th of April to the 5th of April. So we're currently in the 2020/2021 tax year, which ends on the 5th of April this year. Generally, you're probably going to want to register as a sole trader. It's just kind of the simplest type of business setup you can have as a self-employed person. There are other options. Limited company is one. It kind of gets more complex if you want to set up a limited company. But yeah, so sole trader is probably the one you're gonna have. So once you have decided that you're going to register as self-employed, you're going to choose a business name. So it can just be your own name if you want. So yeah, mine is just my own name. Or you can choose a name. There are some rules as to kind of what you can and can't have as a business name. So you can't have anything offensive. You can't use something that's already trademarked, and you can't kind of use anything that implies you are a limited company. So you can't have kind of limited or LTD or like public limited company or PLC or anything like that in the name. Yeah, a couple of other rules like that. So yeah, this is a website if you want to register for self-assessment. Again, this is in the handout that we're going to share at the end, so you don't need to grab it now. But yeah, so you go on here to register with HMRC as self-employed. It's quite a laborious, lengthy process. It's not laborious, it's easy, but it takes a while. So what happens is you will kind of register with HMRC on that page. They then send you a UTR number, so it's a unique tax reference number. They send that to you in the post, so you have to wait for that to come through. And then I think, so once you've got that, you can then sign up for the government gateway, which is kind of the whole system that you use to file your tax return. I think you have to wait for another like activation code to come in the post for that as well. So yeah, HMRC estimates it can take around 20 working days for the kind of whole thing to happen. So yeah, if you need to register, don't do it at the last minute. Yeah, because it can take a little while for you to do that. Cool. So then once you're registered, it's really important to just keep records of all of your income and all of your business expenses. Yeah, it makes your life a lot easier if you do this as you go along. Don't kind of panic towards the deadline and try and scrabble together for all of your money you've had coming in. That is not fun. And it's much better to be organized. But yeah, you have to keep records so that you can file your tax return. If you're employed as well, so if you're not just self-employed, but you have employers, so maybe you have a part-time job doing anything, like working in a supermarket, whatever, it's a really good idea to keep track of that as well. And just have all of the info, because it just makes your life easier when you fill out your tax return. Keep any kind of pay slips you get, keep any P60s, which is like the annual summary you get. If you leave your job, keep your P45, basically keep all the paperwork in an easily accessible place. It will make your life much easier. And then just a word on kind of accountants. So if your tax affairs are going to become really complicated, get an accountant. If you're doing kind of international touring or anything like that, it can be really helpful. But that being said, if you've just got, simple tax affairs, like if it's your first year and you haven't earned that much, generally you probably don't need to pay for an accountant. They can be pretty pricey. So yeah, get one if you need one. But a lot of this stuff you can absolutely do yourself. The key thing is just kind of being organized with it. And then yeah, it's pretty simple if your tax affairs aren't too complicated. Great. Cool. So yeah, so we're going to just look into paying tax. So now you're registered self-employed, you've started earning some money, you have to then pay tax. So the way you do this for self-employment is you file a tax return each year. The online form is kind of easier than doing the paper one. There is still a paper one you can do. I wouldn't recommend it. It's just fluffier and harder to fill out and more confusing. And it's also got an earlier deadline for the paper one. So yeah, stick to online is the easiest way to do that. So yeah, on the tax return, you're going to put in all the details of anything you've earned from self-employment, anything you've earned from employment as well has to go on there. Sometimes it's kind of automatically populated. HMRC is all connected up and it does it nicely for you. Sometimes it doesn't and you have to manually put it in, which is why it's a great idea to kind of keep all of your payslips and everything, just so you've got it all to hand. You'll also need to put in details of any business expenses that you've had for the year. So this is for your accounting year, which generally the easiest way to do that is just the tax year. You also on your tax return will have to include any other income you've had. So for example, interest on any savings, any dividends if you have investments, anything like that you have to include. Basically it's all income that you have. Great. So the deadline for paying, for submitting your tax return and then paying your tax is the 31st of January after the end of the tax year. So currently the deadline that we've got coming up in like couple of weeks is for the 2019-20 tax year. So the tax year that we're in now, which is the 2020-2021 tax year, the deadline for submitting and paying for that will be 31st of January next year. Hope that makes sense. One thing to just be aware of, you just have to be aware it's a thing. It's kind of annoying, but it's how it works. Is this thing called payment on account. So what that is as soon as you owe £1,000 or more in tax for any of your tax returns, HMRC likes to do this thing called payment on account. So essentially what that means is they are predicting how much tax you're going to pay for the next tax year based on how much tax you've paid for the return you've just done. And what that means is that you have to do two payments. The first one on the same day that you pay the tax return that you're currently submitting for. And those payments are half of what you've paid in tax for the tax return you've just submitted. So let's say I submitted my tax return for now, and I owed £1,500 in tax. I would then also have to pay half of that again today, well, on the 31st of January, which would be £750. So then I'd have that, which would be my first payment on account. And then at the end of July, I'd have to pay the next payment on account, which is another £750. So then come my next tax return, if my tax is exactly the same and I owe 1,500, I've already paid it, so I don't have to pay it again. If I owe more, I have to pay more. If you owe less, I think you would then just get a rebate. So yeah, it's just a quirk that you need to be aware of, because yeah, the first time that you have to pay payment on account, it might be a bit of a shock, and you might be like, why do I have to pay all this tax? It's just, yeah, quirk of the system. Yeah, it's really important to set money aside throughout the whole year. You know, so any of your self-employed work that you do, as soon as you get money in from that, it's a really great idea to just chuck some money into a separate account that's just for your tax. People recommend sort of 20 to 25% of your income is generally enough to cover everything. You know, maybe more or less depending on kind of the tax rate you're in, but that's a good kind of ballpark figure. Yeah, and if the benefit of putting it into another account is just so it's out of the way, you don't think that it's your money to spend, because you're going to have to spend it on tax eventually. So you don't want to get to a point where you owe your tax and you can't afford to pay it. There are some systems in place with HMRC where you can kind of defer tax payments and things, but then you start paying interest. So if you can afford it, yeah, it's a good idea to put it aside as you earn. Cool. Great. So yeah, we're going to just do some kind of top tips on tax. Lots of these, as I said, are from Martin. So yeah, really important. Just don't leave stuff to the last minute. It will make your life a lot more stressful than it needs to be. Yeah, it's really important to keep everything, keep a note of everything as you know, as you earn it, really. So yeah, don't leave it to the last minute. Also, it's just a lot less stressful if you can do your tax return early and before the deadline. It just will make you happier generally if you can.
And it's very easy for us to sit here and say, don't leave it to the last minute, don't leave it to the last minute. But there are so many of us that are self-employed that leave it to the last 2 weeks of January before sitting down to do our tax. And I can assure you, it is very stressful to sit and do 2 whole days of sorting out your receipts and everything else. Yeah. So the little and often is a lot easier, I can assure you.
Yeah, absolutely, indeed. And yeah, talking of receipts, keep all of your expenses receipts. We'll go through in a bit the kinds of things you can claim as expenses, but yeah, just make sure you keep all your receipts. Ideally, be as organized as you can with it. Do it month by month, have envelopes, whatever. You just need to keep the physical receipts because you may need to send. So you won't always need to send them to HMRC. But if you do get, it's called auditing by HMRC, whereas basically they just come in and double check that everything you've said is correct. You may need to show your receipts. It's quite rare, like it won't happen for a lot of you guys, maybe even ever, but you have to keep them, I think, for at least 5 years. So keep the physical paper receipts. Also, anything you buy online that is a business expense, save that receipt somewhere on your computer. Just make it as organized as you can. And yeah, kind of along the same lines really, but yeah, track your income. Spreadsheets are indeed your friend. I love a spreadsheet. Yeah, just make a note of all of your money that's come in. It's also a great idea on that to kind of, if you've invoiced, say when you've invoiced, say when the payment's due, say when you've been paid, how much it is, what it was for. Yeah, just track everything. And you can also track on that any employed income that you've had as well. Just having it all in one place makes it a lot easier when you come to do your tax return. Cool. And then I think, Martin, do you want to say a bit about touring?
Yeah, so I mean, this kind of applies across the board, but one of the things I always get caught up on with touring, and a lot of people do, is that a lot of the digs and things that you're staying, you have to pay cash for. And they should give you, and wherever possible, you should always be asking them for a receipt for the cash that you've given them. They shouldn't be taking cash away from you without having some sort of record for you to walk away with. And it's really good to keep those receipts. However, if you've paid cash, it's not on your bank statement. And so therefore, this is where keeping all your receipts really matters, especially when you're trying to get the amount of tax you're paying down and the amount you can claim for and stuff. So I found a few years ago, the easiest thing to do is to set up some form of spreadsheet, or for a couple of years I kept it in the back of my diary, where I noted every single digs that I stayed in. who they were, how much I paid, how I paid, and the date I actually paid them. Because sometimes you pay your digs in advance, sometimes you pay your digs when you get there, sometimes it's cash, sometimes it's by backs, sometimes you're staying in a hotel and you paid that like years before because it was cheaper. It's always good to make a note of where you're staying, and for two reasons really. Yes, it helps your tax, but also when you then go on tour again and you're hitting these different places, if you've made a note next to said digs that you've stayed in, don't stay there again, then you won't stay there again. And it's a really good way to remind yourself of like where you stayed. And if there is really good digs, when people do bounce up in, you know, in the chat or wherever you know, like where you're talking to each other and they say, oh, has anybody got any digs for this place? You can say, oh, try so-and-so, they were really good. And it's good to share that wealth of knowledge between us while you can. So I mean, the important things that you need to remember, especially like with the digs thing, is knowing how you paid, knowing that you've got a receipt for it if you have paid cash, and making a note of those cash things, because actually digs is one of the greatest amounts of money that you can claim back on your tax. And if you don't have any record at all of how much you've spent, then you can't put that into your tax return. So it's a really, really handy thing to have, and quite a big chunk of the money that you need to account for, especially considering, and this is something that you didn't mention earlier, Rosie, which is a really interesting point. When you're on tour, so you'll get a tour wage generally, it'll be X amount a week. And then you'll get on top of that, you'll then get touring allowance. And touring allowance, I think, and Mark might correct me on this, but touring allowance currently is $225 a week, I believe. It might have gone up to $250. It's $225 a week. Thank you, Mark. It's $225 a week, and but you have to count now. The way that the HMRC have done this, you now have to count that as part of your wages. So way back in the day, you used to be able to say, oh, that's free money, and then all you didn't count your digs into your finance and everything. Now any money that you get, including the travel money they pay you, because generally also companies will pay you what they call point-to-point travel. So you'll get a payment from where I say London to Edinburgh. And the London to Edinburgh, and it depends on the company you work for as to how they offer you that payment. But they will offer you a point-to-point travel payment, which is basically for you, an allowance for you to move from venue to venue on a weekly basis. They don't cover any of your travel throughout the week generally, but the thing to note within a contract, when you do get a contract in terms of that point-to-point travel, is ask the question of what is point-to-point. Are you considering that as a train ticket? If you're considering it as a train ticket, is it a 2-week advance? Is it on the day ticket? And ask all those questions about what that value of the money is, so that you know what's coming up ahead. And if you think it's unfair, challenge it, is what I would definitely say, because a lot of the time, especially for technicians, because we are expected to travel on a Sunday, some of the rail fares go at a premium on a Sunday, depending on where you're traveling to. And because obviously, if you're doing a loadout and you don't finish work until say 3 a.m, having done your loadout, you don't want to be on a 10 a.m. train going to Edinburgh on a 7-hour journey. You want to be on a 12 o'clock train because you want to be able to get to sleep and sort yourself out and check out. And a lot of what, if they specify the actual train ticket that they're allocating for you, generally what they're saying is, well, we can get that ticket for you at 10 a.m. And you're like, but I won't be traveling till 12, and then that becomes a premium. So so feel free within this whole finance thing, be aware of those things as part of your wages, because these things are really important as part of your touring finance. But remember, any of that money they give you on top is still by the government is still considered as part of your wage, which is then a top up, which means you then have to keep every receipt for every bit of travel that you use. If you use taxis through the week to get you to and from work, parking fees, anything like that, keep all those receipts, especially parking fees, because it's unbelievable if you do drive on tour, the number of times that you rock up to a car park and you put £2 in here or £5 in there, and you just do it and just pay cash. I did it one year, and I think my parking fees, just on cash payment parking fees, I think was somewhere in the region of about 500 quid. And that's a lot of money to offset against your, off against your tax. And it's all money you can claim for if it's parking for work. So these are really important things to remember, especially when you're out on the road on tour. That any extra money you're being given, you need to make sure you can counteract that money. So the tax that you're paying is against your wages, not against your on costs, which are the additional things you get given, which is like your touring allowance and your travel money. I am happy to take any questions about that at the end. If you've got any extra questions about that, bang it in the chat, and back to Rosie.
Cool. Great. Yeah, thanks, Martin. That was super helpful about touring. Fab. So yeah, so just some other examples of other expenses you can claim for. So less about touring, so just kind of in general. So it's basically you can claim on expenses things that are wholly and exclusively for the use of your business, basically. Again, in the handout that we're going to send out, there's a link to kind of the official government page on the stuff you can claim for. But yeah, things can be things like accountant fees, admin costs, so any stationery you use kind of for work. If you have a website, kind of hosting costs and things like that, subscriptions, any tools you have. And if you work from home at any point, you can claim kind of a portion of some of your bills, so like broadband and mobile, etc. So yeah, expenses, absolutely anything you use for your business, you should absolutely claim back. Yeah, it's really important, because otherwise, you're paying more tax that you don't need to pay. So yeah, talking of tax, so yeah, generally, as for self-employed people, there are two kinds of tax you'll pay, so income tax and national insurance. If you earn over £85,000 in a tax year as well, you need to register for VAT. But I guess sadly that's unlikely for a lot of us, because £85,000 is a lot. So we'll just talk about income tax and national insurance just really quickly. So yeah, income tax, the way it works is you get a personal allowance each year. So up to that point, you won't pay any income tax at all on any money you earn up to that. For self-employed people, you pay tax on your profits. So that's why we keep talking about expenses. So your profits are your earnings minus your expenses. So yeah, you only pay tax on your profits, which is why keeping a record of all your expenses is super important. So yeah, the personal allowance in this current tax year is £12,500. It generally goes up a little bit each year. So if you earn up to that much, you won't pay any tax. There are some little things that can change your personal allowance slightly if you're married, for example. But yeah, the general one is that. There's also this thing which came in a few years ago called the trading allowance. So that's basically when you're self-employed, that means for expenses, if your expenses are £1,000 or less in any tax year, you just don't need to have a kind of detailed breakdown of what they all are. You can just, on your tax return, tick the thing that says claim trading allowance. And that just gives you a blanket £1,000 allowance for all of your expenses. If your expenses are more than £1,000, which is likely to happen if you're touring, for example, as Martin was talking about, that's when you really want to, break it all down and put the exact figure and have the whole breakdown. Obviously, keep all of your receipts anyway throughout the year, because you need to know how much your expenses were to know which one to claim. But yeah, the trading allowance, you can't claim the trading allowance and also claim expenses. So yeah, just something to be aware of with that. So then income tax, currently this is again for this year, the thresholds I think can change a bit, generally don't. So yeah, in England, you can see on the screen, but yeah, you pay 20%. And it's really important to understand with income tax, if you earn £50,001, you don't pay the 40% on all of that money. It's just on the bit of your income between the bands. So currently you would pay nothing on £12,500, which is your personal allowance. Any profits you then had between £12,501 and £50,000, you pay 20% on that chunk. And then if you earned £50,001 to £150,000, you pay 40% on that bit. So that chunk between those two figures. And then anything over 150,000, you pay 45% on. It's also just worth being aware of the personal allowance can decrease. So I think if you start earning If you earn over £100,000, it starts decreasing. But yeah, you know, you have to have pretty high incomes for that. The Scottish rates are slightly different of income tax. They just have more bands. So you've got like a 19% band, a 20%, 21%, 41%, 46%. You can find them all online. They're just, yeah, there are more bands in Scotland. Cool. So national insurance, this is just another sort of tax that you're going to have to pay if you're self-employed. They have different, they're called different classes of national insurance. So if you're employed, you pay class 1 national insurance. If you're self-employed, there are currently 2 kinds of national insurances that you pay, class 2 and class 4. The class 2, there keeps on being talk about getting rid of them. They haven't got rid of them yet. They might get rid of them, but at the moment we still have to pay it. That builds up credit towards things like your state pension and eligibility for certain benefits like universal credit. Yeah, so for state pension, I think you have to have, they call it qualifying years. So it's kind of years when you've either paid national insurance or have had certain exemptions. For example, if you have a baby and have like maternity pay and stuff like that. I think you need 35 qualifying years to get the kind of full state pension amount. So yeah, I'll just run through these super quick. Class 2 is a set, so it's £3.05 per week that you just have to pay if your profits are over currently £6,475 in a tax year. So that's just a set, yeah, weekly amount if your profits are over that. And then class 4 is if your profits are over £9,500. So again, it's a kind of staggered thing. So as you can see, 9% on profits, 9,501 to £50,000, and then anything over £50,000 profit, you pay a 2% national insurance on. Yeah, these are just the taxes you're going to have to pay. You can, if you want to get, you know, fancy with your spreadsheets, you can, as you're tracking your income, just have a little kind of tally at the bottom of your spreadsheet, figuring out how much tax you're going to owe throughout the year, if you want to do that. Something to do. Great. So yeah, and then so finally, before we have questions, we're just going to talk a bit about invoicing. So this is something you're all probably going to have to do at some point. We've just got an example, not the prettiest, but this is an example invoice, just with all the stuff that you need to include on it. Again, in the handout that we send, we've got a link to the official site, which tells you the things you have to include, because there are certain things that just legally you have to include on invoices. They include an invoice number. I think you also have to include the word invoice on there somewhere. Having an invoice number also just makes it a lot easier for you to track yeah, your own, when you've been paid and what it is and what, yeah, everything. Yeah, you need your business name, address and contact info. You need the employer's name and address. You need the date of the invoice, details of the work done, including when you did it. If you did multiple things, multiple bits of work on the same invoice, you need to kind of put the amounts for all of the things, and then a total amount. And then yeah, you need to obviously put your bank details so you can get paid. And yeah, a payment deadline. Generally people set kind of 28 or 30 days payment deadlines. Yeah, it's just, yeah, a thing that is good to have on there.
28 days is an easier number because it's 4 weeks.
Yeah, exactly.
That's the thing to put in your head. A lot of people say, well, we have 30-day invoice policy. You say, well, actually, I have a 28-day policy, because that means if I give you an invoice on Monday, I know I'm going to get paid in 4 weeks on Monday. And that's and it's a lot easier to work out and a lot easier to chase people for as well. But you are more than within your rights to set those you know, to set those days and how far ahead it is.
Yeah, absolutely. Thanks, Martin. Great. And yeah, as we said earlier, it's just really helpful to track when you've sent the invoices out and when you've been paid. Yeah, it just means that you're not sitting around not knowing whether or not you owed money. And just, yeah, talking about payment dates then. So yeah, you are within your rights if you want to charge late payment fees and then start charging interest if you still don't get paid. It's completely up to you whether or not you want to enforce it. Yeah, I personally have had a couple of, I think I've had 2 times when I've been paid late. Personally, I haven't decided to charge the late payment fees because I've kind of sent a polite email when I haven't been paid on time saying, please can you pay me like ASAP, and they have, so I kind of leave it. But yeah, yeah, you are within your rights to charge late payment fees if you want to. It's just up to you whether or not you do on that. Fab. And I think then that is the end. So yeah, I don't know if we've got any questions in the chat, Martin.
There was one from Bethany that just said about websites. We do have we do a handout that Rosie's done for us. I think she's going to bang that in the chat in here.
Yes.
Just so that you've all got also all the links and things that she's been talking about. So we've put into a handout. It's a PDF, and all the links are accessible links, which is great.
Yeah.
And then is Ben on here still? You put in a question about cashback. Do you want to just come on and ask that question? I just need a bit more specific information about what you're asking.
Yeah, that's fine. I don't actually know what cashback is. I've never really heard about it. Or like I've seen it being offered, but I've never understood what it is as a what the concept of it is.
Sure.
Could you just explain a little bit about it?
Yeah, absolutely. So when you've got kind of sites like Top Cashback and Quidco and all those ones, generally it literally is you get either a set cash amount back. So let's say they've got everything on there, but let's say you buy an insurance policy, you click through their link and buy an insurance policy, you might get £20 cash back, and that will literally just be you buy your insurance, and then normally a month or two later the company will just approve it, and you'll literally just get cash paid into your account. On, let's say you do Top Cashback, you'll get money paid into your account, which you can then just withdraw to your bank account. So yeah, it literally is either cash. Sometimes it's a percentage, so it might be like 5% cashback. So if you spent £100 on something, you get £5 back. Simple as that.
Okay. So you don't pay like interest on that then?
No. So yeah, it literally is free money. I know, it's mad, and I still don't fully understand why companies do it, but they do. I think it's just a way to get people in.
Okay.
And spend more. Obviously, you might be tempted to spend more so you can get more cash back, which doesn't make sense because then you're just spending more money. So yeah, only ever do it on stuff that you would actually buy anyway.
Fab, thank you.
No worries.
Kat's just put a thing explain a little about a UTR number. Your UTR number is your unique tax reference number, and it's the way the government works out who you are and how much and tracks your. It's the same sort of thing as your national insurance number, but it's your self-employment number, if you like. It's your payroll number for the government, so that you can they can just track how much you're paying and all that sort of stuff. Does that answer the question for you there, Kat?
Yeah, that's great. Thank you. I'm guessing we need to apply for that as self-employed.
So when you register self-employed with HMRC, which is what we were talking about earlier, when you do that whole process, you will automatically be sent a UTR. So that's the whole point of when you register, that they will give you that information. So then when you then log in on the government gateway, when eventually you get all that information through, your UTR and everything is on there, and that's how they work out who you are. And generally what they do is they match your UTR up with your national insurance number, so the two things come back together. So yeah.
Brilliant, thank you.
No problem.
I have just sent the handout PDF in the chat, so hopefully everyone can see that. You can download it. It's got some handy links on there. As Martin said, for a lot of the stuff that we were talking about today.
Emma, you've just put in a question about do you have to be employed for a certain length of time before you can apply for a mortgage? It depends on the mortgage company. And I'm sure Rosie will back me up with this one. Generally, you have to have 3 years of audited accounts. And by audited accounts, it means that an actual accountant has to has to approve them in order to be able to qualify for a mortgage for most companies. So, I mean, there will probably be some out there that will do less, or there'll be some out there that require more from you. They might want 5 years. And that's more to prove that generally when mortgage providers are putting together your mortgage, it's to make sure that you can afford to pay the payments that you're saying you can afford to pay, and proof that you earn the money you're saying that you earn, which is why they say 3 years worth of accounts. Then you've got that, they've got a track of how your money in and out is going over a 3 year period, basically.
Yeah, exactly. And it's worth saying with mortgages, it's worth just going to a broker. So a mortgage broker, there are lots of ones that are free to use, and they'll kind of do a whole comparison. I think there are some that probably are tailored for self-employed people as well. So yeah, they'll kind of really talk you through everything and let you know exactly what you need in terms of accounts and stuff.
And if it ever comes to that point as well, then it's always worth shouting around a few other people, especially if you get into groups like the Friends of the SMA, because there's plenty of people on there that are probably paying mortgages and probably have been through that situation, and they will have advice and will have recommended brokers and things that you can go to in order, and it's very relevant at the time, because a broker that somebody has used might not exist anymore and things like that. So it's always worth giving a shout out to other people within the industry for things like that. National insurance company deducts from you as a result of your tax return. Do you pay separately? So if national insurance contributions now, when they do your final calculation on when you submit your tax return, they do wonderful sums in the background and give you a breakdown summary. It's horrible. It's like the worst 5 minutes of your life waiting for that thing to come through, because that's the moment when the bill's coming, and you hold your breath and pray it's not going to be a lot of money, and that's the point where you can choose to accept or go back and look at your finances and work out whether or not you've missed anything. Now, interestingly, on that point, before I go on to about the national insurance thing, always double check your tax return, because there have been times when I've done it and I've put my expenses in wrong, and all of a sudden I got a £10,000 tax bill, and then realised that I put a figure in the wrong box. I went back and corrected something, and I was owed £2,000 in tax. So so the government gave me money back, which was great. So it's always worth when you've done all the form, going back and just double checking that everything's in the right box before you get that calculation. But when you do get the calculation, it does break it down, and it will tell you how much tax you need to pay, how much national insurance you have to pay, and all the breakdown is there, and you just pay it all as one fee to HMRC. I mean, it is worth getting an accountant when you're earning the money, Mark. However, having done my own tax for 10 years until this year, and the only reason I got an accountant this year was because I'm looking to start getting mortgages and things like that. So I'm getting to that point in my life. Sadly, I am getting that old, and I also did some touring abroad, which does make what you can claim and where you can claim it and all those sorts of things very complicated. So I took on an accountant this year. It is worth doing if it's worth spending the money, but right now, for many students and graduates, honestly, do your own, because it saves you £300 a year that you don't have to find, and some of them are £300, some of them are more. So it is really worth, if you can do your own accounts, do it. Mark, go for it.
I'm so sorry. Can I just put in a slight counter argument? I appreciate exactly what you said and what Rosie said, but I do think that as well, it for me, it is a cost of doing business. And I know Rosie mentioned about sometimes the taxman can audit you. It's very rare. It doesn't happen very often, but it did happen to me in my 20s, in my early 20s, a year out of college, 3 years out of college, I'm sorry. So I absolutely got an accountant at that point, just for the security of dotting the I's and crossing the T's. I absolutely respect what you're saying, and I agree with Rosie that the self-assessment forms are possible to do yourself. I've got to tell you, I've been doing it for 35 years and I still struggle with them, so I just get an accountant to do it. And for me, it's £260 a year well spent, that I don't actually begrudge, just as a counter argument, if I may be so bold.
No, that's good to hear. And I think if you're not confident with it and you are worried and you think that you could make mistakes, then it could absolutely be a good investment for you. So I guess you just have to weigh it up. Maybe try one and see. If you haven't earned very much in a tax year, and it's been very simple what you've earned, you could try filling one in. If you're like, oh my god, I have no idea what this means, then if you think it's worth it to you to get an accountant, then absolutely, it's a valid thing.
Tyler.
On accountants, I've been using theatre accountants who are great, because they're theatre-based accountants. Mark's got his thumbs up. I know that Martin used theatre accountants this year, so they're great, and they understand the industry, so it's great.
Yeah, it's worth, and that's a really good shout. If you're looking at getting an accountant, make sure you do go for an accountant that understands what it is they're doing the books for, because and they know the types of things that they're looking for in terms of your expenses. You don't need to explain to them why you're staying in different digs every week, all that sort of stuff. They just understand. So, and the theatre accountants aren't the only people that do accounting for theatre, but they're a really good company and they know what they're doing. But there's plenty of others out there as well. I just did a whole total BBC moment there, didn't I? Where we're not advocating one company. We're advocating many. I'm just double checking the questions.
Yes,
Kat, wherever possible, don't make mistakes. You'll know if you've made a mistake, because when you get to the end, because in your generally I find in your head, if you've done your own accounts, you've generally got some sort of idea of what the tax figure should be at the end, a ballpark figure. You expect it to be somewhere in the region of about this amount of money because of the money you've earned, and knowing all, you know, if you've prepared all your accounts and everything, you kind of get to the thing where you're like, well, actually it should be somewhere in the region of about this. That's what my bill's going to be. If it's massively higher or massively lower than what you think it should be, that's the point when you should then, when you get that calculation, is where the point, because it gives you a little thing at the end that goes, do you want to submit now or do you want to go back and review? If that figure is massively different to what you thought it was going to be, then that's the point to go back and look over the form and just make sure that all the things, you've ticked all the right boxes and everything else. And, you know, and all the form comes with little information points that you can click on, and it tells you what that box is for and what information you should be putting in there. So it's really worthwhile. I mean, which is, again, don't leave it to the last minute. The tax year finishes in April. It is like you've got until January to complete your self-assessment. Don't leave it till January. We all do. But don't leave it till January. It's worthwhile getting it done at some point earlier in the year so that you can then look over that form and look over it again. And the beauty of submitting early is, if you think you've made a mistake, once you've completed it and everything else, you can actually go back and resubmit. So you can look over it again, and you can resubmit several times before the 31st of January. But after the 31st of January, that's it. So if you leave it until the middle of January to start doing your tax, you've got absolutely no hope of doing a resubmission. So bear that in mind as well. That's a very important point. Cool.
Yeah, definitely. But yeah, and that just, I think we sort of answered, but just to confirm, so national insurance contributions are taken when you do your tax return. That is all kind of in that final calculation there.
Josh, recommended software tools help keep track of your income and expenses. Excel. There are many things out there, many programs out there. I paid for QuickBooks for for a year and a half. And I'll be honest, for everything that it did, it was great having everything in one place. It was wonderful having the opportunity to be able to like generate the invoices and everything else. But I've been doing my own tax before I used QuickBooks. I've been doing my own tax for so long. I had all my spreadsheets set up. I had all the information there that I needed, and it didn't cost me anything. So yes, there are software and tools out there that you can use, and I would always say shout out and ask questions and see if there's anything out there in the world that other people are using, and take advice from them as to how they're using it. But while the biggest thing that me and Rosie, when we were putting this together, we were talking about it, and one of the biggest things that we were saying to each other was, if you don't need to spend money right now, don't spend it, because if you can, any amount of money you save is money in your pocket. And remember that, especially considering in the current climate that we're in, where that there is not a lot of money coming in for anybody, it is really worthwhile not spending money unless you need to. So, I mean, if you start getting to the point where you're turning over, 40, 50, 60K a year, then that's the point when you need to start thinking to yourself, well, do I need an accountant? Do I need to use programs to help myself do this if I'm going to do it on my own? But until that point where you're going over your personal allowance every year and you start paying a lot of tax, then give yourself a break and try and cut corners and don't spend money where you don't need to, would be my biggest piece of advice to you and that goes across the board. If you don't need to be a member of something, and you don't need to do something, and you don't need to pay for something, save the money and use it and invest it in something that's worthwhile for yourself. Do you know what I mean? Would be a great tip.
Yeah, I mean, yeah, I agreed. There are also some sort of new apps and things springing up, and some kind of, I mean, you can, if you want to, get your own kind of business bank account, so have all of your bank account stuff separate. Often you do pay a fee for these, so yeah, again, it's probably not worth it for a lot of you. I think so the banks I mentioned earlier, Starling and Monzo, the new kind of app-based banks, do both have business current accounts, which I think are free at the moment. They might start introducing fees, but if you can find something that's free, to help with business stuff, and you want to try it out, you might as well, if you don't have to pay. But yeah, as Martin said, just be cautious of anything that you have to pay for, unless you think you're really going to get value from it, I would say.
And one thing I found was a great value. So my bank offered me a few years ago, a savings account attached to my current account. And what I do when I get my wages, especially because a lot of theatre work gets paid weekly. So what I do is I take as much of that money out of my current account as I can and put it into my savings account, and I build that savings account up over the whole year, so that when it comes to the end of and obviously you dipping in and out of that throughout the entire time, but whilst ever you've got that, so you're building those savings up, when the tax bill does come, you have got some money sat there to pay it, as opposed to just spending everything that comes into your account and then getting to the end of the year and going, oh crap, I've got a £3,000 tax bill I can't pay. Which is always a bonus. I mean, I would always say save wherever you can. Sometimes it's not possible. Sometimes you have to spend it, and you just have to manipulate your money at a later date. But it is always worth, a minimum, try and put 25% of your wages away every week, just to try and keep on top of the amount of money you need to cover at the end of the year.
Yeah, absolutely. Cool. And I just see a question from Amy. Should you wait until you hit at least £1,000 in the tax year before registering? I mean, if you know you're going to earn more than that before the tax year is up, then you will have to register so you might as well. But yeah, if you think you're going to earn less, you don't need to register. So you can choose to if you want to, but it then just means you're kind of in the system, and then you'll have to keep filing year after year. So yeah, it's sort of up to you. If you know you're going to earn over it, then yeah, you might as well just register kind of whenever. But yeah, if you don't, if you're only doing the odd bits and bobs, and you think you're going to earn less than 1,000, yeah, you don't need to register.
Work on the theory that most contracts should be paying you somewhere in the region of about £450 a week. Most shows you go into, you're going to have a minimum rehearsal period of 2 weeks. Generally, and then going into whatever contract it is, even if it's 3 or 4 weeks, at £450 a week, it doesn't take you long to get over your £1,000 threshold. So just like, even if you only end up doing one job a year, and that one job a year happens to be panto, it's very quickly you end up getting beyond your self-employed. Also, friends of mine that do both, they do PAYE work and they do self-employed work, have found that generally the taxman ends up owing you quite a bit of money on your PAYE job. So it's always worth, once you've registered self-employed, just keep submitting that tax return, because actually you can normally claim a lot of money back from your PAYE job, where you've probably paid a premium on your account.
Yeah, absolutely. That that kind of applies to me, or has applied to me for a couple of years. And yeah, it's definitely worth doing it, because the way they calculate the PAYE tax is they kind of take your paycheck and assume that you're going to earn that for the whole year. So if you've got kind of lumpy income, or like, you earn loads one month and then hardly anything the next month, you'll almost always get a rebate at the end of the tax year. So it's good.
I'm going to say, until about 2 years ago, when I stopped doing PAYE work, I've probably neither paid about £200 in tax or I've had a rebate for 8 years. So it was quite a gutting when all of a sudden I had to actually start paying the tax man. Just be prepared for that day, because it's horrible. If there are no other burning questions, I'm going to stop recording this session. Say a massive thank you to Rosie for everything that she's done. I cannot take any credit at all. She's put this entire thing together. She is the finance guru.